Hi all, this is Dr. J streaming live from Long Island, New York, where the weather is quite beautiful today. And I'm just hoping that you can hear me as well as see me because I'm using StreamYard again. I'm not totally comfortable with the new software yet, so just bear with me if it's comfortable with the new software. Apparently it's working just fine. I just double checked on YouTube, which is good. Okay. I don't know if anybody is around this time of day, and I didn't give advance notice that I'd be doing a vlog today. So if you are, join me and you can join my chat. And we can have a little fun today. The reason I haven't come on in 10 days is I was away, number one. Number two, my views of the market really haven't changed over the last 10 days. My last vlog, I was talking about the Dow and the S&P testing and probably stopping the correction at the June 3rd lows, both of them. For the Dow, that would be correspond to a 50% correction from the lows of late December, and for the S&P 500, that would correspond to a 38.2% correction from the lows of December. So the June 3rd lows seem rather significant to me, and I'll show you once again. Hey, cabinet guy, how you doing? Yeah, I'm glad to see you guys. So so I don't see any difference in my thinking. I really am convinced almost, at least I'm trying to convince myself, that we have about 1,000 points left on the downside on the Dow, and the corresponding amount left on the S&P. Sorry for the phone call on my phone. People seem to call me at the very, very worst time. Cabinet guy, how you making out? How you surviving this downturn? You hanging in there? I know it's been affecting my pocketbook. Don't think Dr. J is a super genius. I'm very smart. I didn't say I wasn't. But I don't go short. And what I do when I think we're in the downslide as we are now is reduce my positions. Doesn't mean I'm not getting hurt. On paper, I am getting hurt, especially in a couple of my big positions, Athesis, CBM, Chronos. I am going to chart, in addition to the Dow Jones Industrial Average, in addition to the SPX, I'm going to chart Chronos and CBM. And in both cases, I'm fairly optimistic that we're very, very close to bottom. And we're not that far from bottom in my mind on the Dow and the S&P as well. It seems that Trump is fighting the world. Trump is fighting China with trade wars. China fights back. Trump is fighting the Fed chair, Powell, by calling him all kinds of names. I don't know exactly what he called him this time, but he's blaming anything and everything on Powell, setting him up as a fall guy should we enter recession prior to his re-election in what is it now? How many months? 14 months? I think fortunate for him, if we are in recession by then, it'll be just the beginning of it and probably won't hurt him. So I think he'll escape that, but he is protecting himself. I think he's going to use Powell as the fall guy, a guy that he appointed, a guy that is doing the best he can do as an economist, as a man of integrity, to keep the economy on the straight and narrow. Cabinet guy getting hurt some, but looking for some bargains soon. Yeah, I kind of feel the same way. I will be looking to add, but I took some off the table. I told you I sold a lot of my CGC. It left a little. I sold it when it broke the key level. I think it was 39, 37, something like that, and it proceeded to collapse. But I did not sell any of my chronos, which I should have, because it made a comparable nosedive. As did Tilray, as did Afria, as did ACB. All the major pot stocks took it on the chin, and it's still taking it on the chin, and may have a little bit more on the downside. But we'll take a look at the charts. As always, do your own due diligence. My opinions are strictly my own and do not constitute investment advice. Okay, so if you can, let your friends know about this vlog, share the link. If you haven't subscribed already, please do so you can get notifications as to when Dr. J is going on. I really should try to go on like 7 o'clock every Sunday or every Saturday or something. I should try to set an exact time and get guests on and try to spruce up the vlog into more of a show. That's my ambition. I think I'm going to do that. Try to up the quality by getting really smart people on with me, smarter than me. I like to find people that are smarter than me because, I don't know it all, and I like to learn from people. And even if they're not smarter than me, I can still learn from them. I learn from everybody. Smarter, dumber, in between, equal. I mean, true, when I play, I'm trying to use an analogy playing chess. When I play chess with a higher rated player, I tend to learn more than when I play chess with a lower rated player. So I'm going to try to get experts on with me. All right, so let's go and share screen. All righty. Hopefully this will work. What's going on? Share screen. All right. All righty. Here we go, share. Share audio, yes, I'll do that. Your entire screen. What is wrong? I think it's okay. I do think it's okay. All right, so let's go to the charts. It's taking a little while to load. It's a little slower than it was last week when I used it. It's loading the Dow Jones Industrial Averages, which took it on the chin on Friday, really down. For some reason, it didn't update that. So I have to after all that, I have to reload it. So we have to wait again while it reloads. Down 623.34, 2.37%. That's a substantial hit. There's no question about it. The markets were sending a message to President Trump, who sent a message to China by ordering our CEOs to look elsewhere to do business, not to do business with China. Whether or not he can do that, I don't know, but he did it. So that kind of spooked the markets a great deal. It was a double whammy. And the market sent a message back to the president saying, this is maybe going too far. An intense trade war will almost definitely put us in recession. It creates a lot of uncertainty in industry for CEOs. When there's an uncertainty, there's no expansion. The lack of expansion creates the opposite, recession. Okay, enough of my economic dribble, which I'm not an economist. I'm not a financial analyst. Hey, I'm only a PhD in math. And dabble a little in this and a little in that. Okay, here's the 1224 low. What is it? It's pretty. What was that low? 20. I can't see. The low was. You know what? This is a weekly chart. All right, it doesn't matter. The low is 21,712. And the high recently was 27,398. 27,398. So we made quite a, is that right? Got to get this right. 27,398. Yeah, it looks right. So we ran up about 6,000 points. That's nothing to sneeze at. I think 30,000 is on its way. But before we can get there, I think we drop back to the low of the day. We test the lows on June 3rd of 24,680. That would put us less than 1,000 points below where we closed on Friday, which, considering the fact that we were down 600 in a single day, may not take us that long to get to. I don't want to put a time limit on it because markets go up, they go down, but I think we are headed for that. And notice also that that particular low is right smack on the 100-day moving average. It's also right smack at the 50% fib retracement from the December lows to the recent highs on whatever day. July 9th, was it? July 15th? Well, it's hard to tell the exact day because I'm on a weekly chart. Anyway, it does appear very strong chance that we will be retesting that low about 1,000 points or so below the close on Friday. That's my number. I'm going to stick to it. I said it a week ago. I'm going to say it again. I have no reason to change it. It seems like the geopolitical events, although intensifying, are still relatively tame. So I don't see why that isn't a good stopping point. I think, in fact, we might test that rather quickly, and out of fear of the markets collapsing completely, our president and President Xi of China might just iron out a truce or some kind of agreement. Hope looms eternal. Okay, let's take a look at the SPX. All right, SPX. XPX. I know in terms of a live audience, I'm coming to you perhaps the worst possible time of the day and week, 5 p.m. on a Saturday when people are getting ready to go out at night. Even I have a dinner appointment at 6:30, and Dr. J is not the swingingest of guys lately. So 28.47, down 75. That's nothing to sneeze at. That's a 2.6% drop. which but for the week, how was it for the week? For the week, it doesn't look that bad for the week. We dropped from here to here, whatever that is. So, I mean, it was bad, but it wasn't as bad as the single day drop that we experienced on Friday. Let me look at the, okay, let's just look at the June 3rd lows. Here they are. June 3rd lows. 27.28, that's the number. That would correspond to 38.2 fib retracement from the December lows. The December lows on the S&P were on 12/24, I believe the same day. So we're looking at the fib retracements from 12/24 on both the S&P and the Dow. And in both cases, it's an amazing coincidence, if you believe in coincidences, that the June 3rd lows are exactly at a fib number. For the Dow, 50%, for the S&P, 38.2%. Very, very interesting, Artie Johnson would say. Who's Artie Johnson? Anybody know? Yeah, I think I've asked you that before. Basically, you got to be old like me to know. Or you could be a little younger or a little older. All right, this is the 50-week moving average. And this is the 100-week moving average, and this is the 200-week moving average. And we're in good shape. We're trading above the 50, which is very bullish. So despite the big move, it's quite bullish. I mean, it's quite possible the S&P tests the 50-period moving average and bounces off of that and forgets about the June 3rd lows. That would be really nice. Turn around quicker as opposed to later. Let me just look at the picture for the 1 week. I mean, 1 day. Interval 1 day. And for that, we're trading below the 50 and we're trading below the 100 and we're trading above the 200. So it looks like support would be the 200. That comes prior to the June 3rd lows. So whether we look at the daily or the weekly, there is a support level that we could reach prior to the June 3rd lows. In the case of the weekly, I think it was the 50. And in the case of the daily, the 200-day moving averages. So we have a few different likely stopping points. One of them a little better than the other. I'd rather stop at the 200 than at the June 3rd lows, but both are possible. JD, how's it in Dallas? Dallas is 95 and hot, unlike your pot stocks. Well, you know, JD, I got news for you. Your pot stocks are my pot stocks, are a lot of other people's pot stocks, and we're all underwater. We need a good heat wave in pot stocks, not in temperature in Dallas, Texas. So I do think, we're going to take a look at Chronos soon, JD. I do think we're nearing a good natural turning point here for Chronos, CGC, ACB, you name the 3 letters, or the 5 letters, or what have you. I think the only pot stock I'm up on is CNAB. I don't even know what it is. All right. But I bought some of that because it had some kind of merger news and moved up nicely. I bought it on a pullback and I'm ahead. So it's always good to be ahead on something. Uh, Up in smoke, laughing out loud. Well, at least you can still laugh about it, JD. It's okay as long as you're laughing. All right. So these are the two likely stopping points here and here. Let's go on to CVM. CVM is one of my favorite biotechs. Will I be adding? I might be adding to my collection because it came down significantly to below $8. Why does it say $8? Come on. Why does it always give me incorrect charts? I'm going to ignore that. The chart looks right. The daily close was 786. That's correct. So just ignore this top number here. I just don't want to reload again. So where are we with CVM? We're basically at above trend line support. So we're still in good shape. We have trend line support. We have support at the 200. We have support at the 50. We have a wall of resistance at $9. But you'll notice for the week, we didn't go down that much. We closed at 786, I think. The week before, we closed at 815. That's not that much. That's 30 cents off of an 815 close. Not terrible. So for the week, it wasn't terrible. I think trendline support holds here. But if it doesn't, we're looking at the 200 over here. I'm looking for a crossing of the 50 and the 200. That would be nice. What am I in? Oh, I'm back in the weekly. It doesn't matter what chart I'm looking at. So I'm looking at the weekly. It's all the same. In this case, I'm looking for a crossing of the 50 and the 200, in which case it's extremely bullish sign. I think that, again, it holds this trend line support. So maybe we come down to about this level, $6.96, $7. That's the area that I think will find good support. Getting ready for another move to that $9 level. And I said the fifth time would be a charm, right? How many times have we hit it? 1, 2, 3, 4, 5. We already hit it 5 times. The sixth time will be a charm. It will go through that $9 mark. Mark my words. I think it will. It better, because I'm probably, if it goes down anymore, closer to that support line or that trend line, I'll be adding to my position, looking for at least $9 once again. Was it you, JD, who said buy those dips and sell those rips in CVM, right? I hope you've been doing that. Okay, JD. So CVM is looking good to me. I mean, it's a little weak, but the market's been dreadful. Biotech has been dreck. So all in all, it's looking pretty good. Take a look at the daily on it anyway. Daily is holding trend line support the same way. The 50 will prove support as well. I think we're just above support. According to this, the 50 is at 757. 750 might be an excellent place to buy CVM if it hits the 50-day moving average. Of course, if it goes through that, you're looking at trendline support at around $7. Okay, that's the same story whether I look at one chart or the other. We all know the story that we're waiting for 298 events. I don't want to bore you to tears with that story, but for those of you who are new to the vlog, we're waiting for a data readout. We expect it any day now, any week now, any month now, on a 900 patient plus multi-center, very long, multi-year trial on head and neck cancer, squamous cell. Okay, and once we get that data readout, then we will know how rich or poor we are. And the feeling is the longer it takes, the better off we are. For obvious reasons, I think. Chronos. I could go on and on and on and talk about 100 different stocks, but that would be counterproductive. So I just picked a small sample, CVM and Chronos, one pot, one biotech, and maybe it kind of speaks for the industry. Chronos closed at 1140 on the week. The week before it closed at 1211. So that's a significant drop. I think we're very close to support just below the close. So why did I draw this line? Why did I draw this line? I drew this line because it's midway through this big, juicy green candle that started the recent rally in Chronos back on 12/3, I should say. So midway would put us right about 1140. And if that doesn't hold, I think this low will hold. That's at 950 area. I do think 1140 holds, which is just about where we are, right? So I think we're right at support. Dr. J says we're at support. Now, it doesn't have to be midway. I found that when you have a giant green candle like this, anywhere in the body of that green candle, it could be support. And we went down as low as 956 once, so 956 could happen twice. We could put in a double bottom at around 960 very easily. So I'm hoping maybe that we're at support, but support may be more like the 960 area. So in that event, we got a ways to go in terms of pain. I don't like pain. I'm hoping we're at support. I'm hoping we get a rally. And I'm not just hoping, I think it's entirely possible. So it's more than hope. I'm going to go stop screen sharing and just chat with you guys a little bit. And how do I do that? That looks good. Play with my ear a little bit. Perry Como style. Perry Como used to pull his ear. Okay, so what else is new, guys? You want to add anything to this chat? Any words of wisdom? Any ideas? Any great ideas for making do, re, mi? All right, my main idea is to lay low until the dust settles and then come in with some fresh do, re, mi and scoop it up as we make new highs prior to the collapse, the final collapse of this bull market, the final collapse of the economy, and the first signs of recession. Economists on Wall Street have almost 100% of them started lowering the odds of recession, partially because of that yield curve, partially the trade wars. So, I mean, it went from an average of 1 in 5 to 1 in 3. 1 in 3 is still a favorite of no recession, but it's becoming, I think, more and more likely. Somewhere in the next six quarters, I think we get a negative GDP. Okay, so that's about it. I'm going to wrap it up. I'm going to say, please share the link. I'm going to ask you to please give me a like. I'm going to ask you to please subscribe to this vlog. I'm going to ask you to please continue to watch because I really appreciate it. And I am going to bring guests on, worthy guests that I think you'll enjoy, in addition to just talking about the Dow, the S&P, and a handful of stocks. Not that that's a terrible thing to do. This has been Dr. J, bidding you all a great week. Hope to see you next weekend, probably, if not sooner. Hopefully sooner. I mean, we're coming out of the summer, which means I'm going to be a little less busy. And when I'm a little less busy, I might have more time to vlog and chat with you guys. Yeah, see you next week, JD. All right, so I want to say sayonara, shalom, au revoir, arrivederci, ciao. Have a great week. Hasta la próxima semana.